do with the high-flying IPO stocks from the class of 2020 after all the upheaval over the past couple of weeks? Take Lemonade. No, it's not a drink. It's an intriguing company that's using technology to shake up the insurance industry. This one's a puzzle. Lemonade exploded higher out of the gate, surging to 96 in July. I told you it was too expensive at those levels. I wanted you to wait for a pullback, perhaps below 60, which we promptly got a month later. Lately, Lemonade's been bouncing between the high 40s and the high 60s. Last night, the company reported what seemed like a terrific quarter. A big top and bottom line beat, strong guidance, but it didn't seem to matter. Stock actually sold off, plunging 12%. Honestly, I'm not sure what to make of this move. The quarter was very good, but don't take it from me. Daniel, let's check in with Daniel Schreiber. He's the co-founder, chairman, CEO of Lemonade, to get a better read on the results and where the company's headed. Mr. Schreiber, welcome back to Mad Money.
Wonderful to be with you, Jim.
Okay, so the last time we talked, Daniel, which really wasn't that much long ago, you were renters and homeowners. Now, in 3 months, you've added a couple of very tricky insurances, I guess, kinds of insurance is the way to say it. Pet insurance, which I've always felt is way too expensive, so don't get it. And term insurance, which I always felt was such a bargain that I was beating the insurance company. How are you going to make those work?
You're right. So it's been 3 months and the company is kind of a different company. And we're seeing some amazing dynamics. So Pet already launched. And despite your view on this, actually Pet is a fabulous insurance product to have. People today love their pets. They feel like pet parents. The worst thing is if something happens to them, they need to give them treatment. And they haven't got insurance and they can't afford it. So I think it's actually a really wonderful form of insurance. And we launched it just 3 months ago, and it's really off to a roaring start. So we've seen sales much stronger than we anticipated. Efficiencies in terms of marketing took us 3 years to get to where we are in Pet. Took us 3 years in renters. So we're seeing tremendous dynamics, and about 60% of our policies are going to existing customers who suddenly pay us 4 times more premium because pet insurance is more costly than renters insurance. So you see a 4x increase in premium with no cost to acquire the extra premium on our part. And we hope to see in life a similar dynamic. In general, our whole business has been predicated on this idea of acquiring amazing customers young, delighting them, and then growing with them. Pet hits that, term life hits that.
Well, you just use 2 terms that I think people don't understand. One is that you've got wallet. Once you get that wallet, you do well. But delighting? I mean, you're an insurance company. How do you delight? I mean, I don't like, I buy insurance company. I don't even want to know them.
That's where our opportunity really is. We've been in market only for 4 years. J.D. Power just ranked us the top insurance company for renters insurance in the United States, and there are several thousand insurance companies in America. So we've really put a lot of focus on being customer-centric, putting the consumer in the center, using technology to give them the best prices. They can buy insurance in 90 seconds. We pay claims in as little as 3 seconds. If that's not delightful, I don't know what is.
So how many middlemen do you cut out? I mean, for term insurance, for instance, I've always known that insurance people don't want to sell term. Why? Because they don't make that much money on it. But that's not your ethos. Your ethos is to get people to do a lot of business with you. So you probably aren't losing money on term.
No, and we yet to launch it. We announced it just today, and we'll launch it sometime in the next 90 days. We haven't given a precise date. But you're right. That's the beauty of technology, isn't it? That you can give people a superior experience while cutting out costs, crushing costs while delighting consumers. And if I'm paying you claims in 3 seconds, you know that humans aren't in the loop, but you're not going to feel the lack of them, are you? You're going to be thrilled with that. So many industries are being disrupted. I think that insurance is the single most disruptable industry on the planet. And it really is so powerful when you can build an insurance company from scratch using a digital substrate. All of these benefits accrue.
Now, I couldn't agree with you more, but I was talking to my staff. I said, do we really want Lemonade on? I like the guy, but does anyone know Lemonade? I figured that people were going to say, well, listen, Jim, no, what are you talking about? I'd say the majority of my staff uses Lemonade. How did they find out about you?
Well, first of all, thank you to them for their business. I'm so happy to hear that they're using it and that they're happy about it. Look, with the results that we just announced this quarter, it's a pandemic and all of that. We just doubled our business year on year. So Q3 this year to Q3 last year, our gross earned premium more than doubled, while our losses, and we are still losing, money halved in terms of losses per dollar of gross earned premium. So we are seeing these dynamics of fast growing top line, tremendous efficiencies and increasing profitability into the bottom line. And it really is through the delighting of consumers. So all of those folks that you asked about Lemonade and they put their hands up, they tell each other, they get a good experience, they pass it on. We are maniacally focused on delighting consumers, and we think a lot of benefits come out of that. One of them is lower costs of acquisition, higher retention rates. In fact, our spend on sales and marketing this quarter was 25% lower in absolute terms than the same time last year, even though our business is twice as big. So you really start seeing that feedback loop kick in, better experiences, more delighted consumers, lower costs, higher retentions. You start seeing the flywheel spin.
Okay, so I have to tell you, Daniel, I don't like to look at the stock price when I read the quarterly reports, when I read the shareholder letter, when I listen to the conference call. I don't like to because I don't let that interfere with my thinking. I read it, and I said, this stock should be up nicely. And then I read one of these analysts said, listen, it's not up because approximately 33% of the IPO lockup will expire tomorrow. And I say to myself, what happens if they don't sell? Because then you're going to find out what the true stock is. We don't have any insight necessarily about how much is going to be sold, but I can't imagine everyone's going to want to sell at these prices.
And you know, you and I have discussed this before, but we are all about the long term. We are still a small insurance company, a young IPO company. We're talking about building for the next 5, 10, 15, 20 years. We're not really thinking about this quarter to quarter. So yeah, the stock does its funky things. We'll let the stock market do what the stock market does. Our eye is on the prize, which is building an iconic 21st century incarnation of what an insurance company should really be.
And I have to believe someone who starts as a renter in a one-bedroom might move now to the suburbs, as we're seeing when we're talking to Rocket Mortgage, and then takes a new policy. Maybe they buy, then they get a pet, and they take the pet policy. Then they realize they're about to have children, and then they take the term policy. So the runway is pretty clear here.
And let me tell you what that translates to in terms of numbers, because it will blow your mind. Usually when we think about subscription-based businesses, think Spotify, Netflix, an upsell might be 10%, 20%. That life cycle they just described, somebody will start with a $150 policy on average. Then when they go to the suburbs, we just reported this quarter that although our business doubled, the number of people going through the process that you just described, graduating from renting to homeowners, grew 300%. So it's outpacing our growth at large. And each of those customers sextupled their premium. So they went from 150 to 900. You layer on top of that pet, you layer on top of that life, you're talking about something like a 1,600% increase in premium. Well, so absolutely with no cost. So it's a big deal.
That is rather remarkable. As someone who was in sales and taught sales, that is incredible. Daniel Schreiber, co-founder, chairman, CEO of Lemonade. Thank you so much, sir.
Thanks, Jim.
And just so you know, a quick note on this one. I've just been thinking. I remember this is Lemonade is the number 17 on the CNBC 2020 disruptor list of the 50. Look at this. Look at these people. Jeff, you're always welcome on the show. Don't be a stranger, all right? CNBC Disruptor 50 Summit is 1 week away. Join us to celebrate the companies on the 2020 list and hear about breakthrough innovations from inspiring entrepreneurs. Visit CNBCevents.com to see a full agenda and, of course, register to attend. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.